Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host, and I've got a picture of the Dow up. Let me zoom out first. And the reason I have it up is because we've got this consolidation going on in the Dow. Now, the Dow is only 30 stocks, but when the market gets defensive, sometimes the Dow is an important index to look at. So we're going to look at it for just a few minutes here today. Anyway, we've got this consolidation here, which sometimes is referred to as a triangle. And if this is a triangle, we could get another upward burst to a new high. Now, first, before that would happen, we would get something that looks like this, and then something that looks like that. But I just want to mention it because it is a possibility. Now, normally what I do is I'm pretty focused on the S&P 500, and the reason is because the S&P 500, it's diversified. It covers 500 stocks, and it's usually a better measure of what's going on in the overall market. And you can see that we didn't quite get up to that line, which kind of has me wondering, whether or not there's a little bit more upside here. We do have a little doji, and sometimes dojis, when you start getting dojis at the top of a trend or at the bottom, it's a good time to start looking for a trend reversal. But we could see a slightly higher high here next week, something that takes us to the trend line, and then we start to roll over from there. Last week I showed you a chart. I showed you a chart, a ratio chart of the VIX, and the reason I did that, and I'm going to put the studies on for just a second, so that we can look at a Bollinger Band. Pull up this ratio chart, because it's kind of an important chart. Now, what this is a Bollinger Band, and this line down here is where the VIX, the ratio between the VIX, the S&P 500 VIX, and the VXV, which is the VIX for the larger cap, like the Dow stuff. When that ratio gets to below 0.8 and you get a close outside of this 2 standard deviation range, for some reason it's not showing it though, is this Bollinger Band is not picking that up as a close out here. This was actually a close outside the 2 standard deviation range, but this Bollinger Band's not showing it. So let me go ahead and take this Bollinger Band off, and let me just say that this close right here, oh, I know why. Because I'm looking at a weekly chart, and I need to be looking at a daily chart. So let me put up a 2-year chart daily. Okay, so you can see, let me zoom in here a little bit. You can see that right here, so this was Friday, Thursday, Wednesday, Tuesday, Monday. So you can see Monday we had a close outside. Now this actually closed outside too. So we actually had 1, 2, 3 consecutive closes outside the 2 standard deviation move. But I guess these 2 were the only ones that closed outside and below this 0.8 ratio. And then of course we turned back up and went the other way. Now this completes the signal. Once you have a close below this 0.8 and outside this 2 Bollinger Band, then this completes the signal, and when it reverses, that's when it actually completes the signal. So we could have, a lot of times you'll get a reversal with these. I mean, if you go back and look at some of these other ones, we really haven't had one since kind of this area right in here, December 5th, November 26th. And so if we go look at the S&P 500, let me take these. Let me take this study off. So if we go back and look at the S&P 500 now, I get my clicker to work. Okay. You can see that on December 5th, we had this going on right in here. So December 5th is right there. Well, the December 5th was the weekend. But you can see that we had this sell-off, and so it was right near this trend line. And here we are right near the trend line again. It could be that, we've got this sell-off, and then we're going to have a little bit of a bounce, and then the sell-off is going to continue. So here we've kind of approached this trend line. We've had a sell-off. We might have a little bit bounce next week, and then have this continue down. Or, like I said, we could retest this trend line. I mean, we're so close to it, and there's no reason why the market couldn't go back up and just touch, even intraday, touch this trend line and then reverse. So there's two important things going on. One, the trend has changed in the S&P 500. We're watching that very carefully. But in the Dow Jones, you've got this consolidation, which could indicate a new high. So which one is the market going to follow? Well, there's no way to know. We just have to watch it very closely. I would say probably spend the next few weeks watching the Dow, and let's see if the Dow stops here at around 15.5, 15.7. I mean, that looks like the next area of support for the Dow. So if this kind of meanders its way down and looks like it stops here, in other words, let's say you get a candle, looks like, this with a tail on it, kind of like these others. And then, you get a reverse, maybe the following day you get something like this. Well, then that tells me this is probably going to hold and that we're going to make new highs. And we'll watch it very carefully. And of course, if it does that, I'll be sure to mention it here on the YouTube channel so that you can prepare accordingly, whatever that looks like for you. The short-term interest rate is hanging in there, which tells me the Fed, even though they didn't raise rates here recently, they are probably going to continue to raise rates, maybe in April, since March is over. The 10-year yield continues to confuse a little. To me, this looks like this could be an ABC, and if it is, we're probably going to go to a low just beyond this low. So, you might envision another box like right here, and you could have yields over the next several weeks make their way down into this area around 1.5. Now, keep in mind that the low in yields is back here, and this low is 1.394. So the thesis is at this point is this is the low, and that it should hold. So even though yields pull back to 1.5, let's say, and then in the upcoming weeks, we still feel like, at least I feel like, that this low should hold, and that we should bounce, and the bounce is going to be pretty dramatic, and would at least take rates at least to this 4% range, and maybe, if the pattern suggests, actually much higher than that. So watch that closely, and if you start to see yields go this way, take those bond funds and move them into something else, because it's gonna cause a lot of money losses in your account. And we've talked about that, many times before on here. Okay, let's look at the Euro US dollar. To me, the dollar, I really ought to get rid of these lines. The US dollar, euro, also looks like it's in some sort of consolidation. since way back here. And, it's likely to continue. Probably a down up, maybe another down up, like something like this, and then this. And then we should see the euro make lower lows and probably come pretty close to that parity level, certainly make lower than 1.05. But near term, I would say for the next, 3-4 weeks, probably going to see the euro slide and move into this area. Probably have a brief little rally that'll last a week and a half, 2 weeks, and then sell off again down out of this triangle, this consolidation. Of course, the dollar, would be the opposite of that. Let me look at a weekly on the dollar. And and you can see here that the dollar also seems to be in some sort of consolidation. You can see from high to low here, the dollar seems to be in some sort of triangle as well. So that means the dollar is probably going to rise here for the next 3 to 4 weeks, find resistance, roll over, have a brief rally for 1.5, 2 weeks, and then make some new highs. So look for that to happen in the dollar. It's, these are huge, huge patterns, so they take a long time to develop. That's why we're looking at them on a weekly chart. If you were looking at this on a daily chart, it'd be harder to tell which direction the dollar's likely to go. Anytime you shorten the time frame, you get a lot more fluctuation, and it's harder to see the longer trend anyway. So that's why we've been kind of focused on the weekly charts. Since we're talking about the dollar, let's look at gold. Gold is another one that a lot of people are interested in. You see this long run up into that 1900 area, and then for the last 3.5 years or so, gold's been pulling back. And it broke out of this, looks like it broke out of this downtrend line. We're looking for gold to move up into this resistance area, which it still has a very good chance of doing, even though you got this pretty dramatic down week last week. Again, it could chop around here a little bit like this, and then kind of launch into this area. So sometimes when you get toward, you have a really strong trend like this, you get some consolidation, and then you get a continuation of the trend. So if you're in gold, if you bought gold or whatever, you're probably okay, although it could pull back, into this red line area that I have on here. And so, you just have to be willing to accept some drawdown if you're trading gold or any instrument for that matter. There's usually some drawdown associated with it. Let's look at Let's look at oil. Oil has been rallying, but then pulling back, and it's kind of the thesis so far for us is that oil should pull into this area. Now, it might not pull into this area first. I mean, we still have a DP down here. You could see oil actually come down here, even though it's broken. I mean, the longer it stays above this green line, the better. So it could pull back to here, let's say, and then reverse and start making its way up to here, which would take many, many weeks, 10, 12 weeks probably. Or you could see gold, kind of meander around in here, end up breaking this line and coming down and making a lower low, and then taking out this trend line and ultimately going to here. So, usually the reason I bring this up is usually the first low, in this case, this low right here is not the low. So I wouldn't be surprised at all to see oil do this and pull back and actually come to this higher time frame support area and then rally. So But it doesn't have to do that. It could just stop right here on the downtrend line and then reverse. But that's what I see with oil. Certainly, oil stocks should be, in your watch list if you're looking to buy energy. You want to start collecting some oil stocks in your watch list, because whether this move is happening now or it's going to pull back and then happen, you're going to have, this is a pretty big move in oil from, $25 up to, or from $28 up to $60. So that means that the oil stocks are going to move, an order of magnitude 2 or 3 times that. So, be prepared for that. Excuse me. We could look at oil on a shorter term basis, like on a daily, and see if there's any signals or anything. This is a pretty good looking little bottoming pattern here. But you could have oil I would say that if oil, let's do it this way. If oil pulls back below this area right here, say 34. If oil pulls back below 34, then oil's probably likely going to come back, all the way to this low and retest the low. There's a lot of strength here on the daily. Even though the STF is red, there's a lot of strength here, which means even if oil does pull back, it's probably likely to make a higher high from here. So it's likely to end up higher from here, just given the STF and the larger time frame. The trend is more up than down. So let's go back over here to our profit charts and just make sure there's nothing that we're leaving out. A website that, here's the Middle Class Investor site. You can see here's some past videos and some things that I've posted. But another good website for you guys to look at, although this doesn't look right. Well, it's called Zero Hedge. This is not the link for Zero Hedge. I'm not sure what happened here. Maybe I saved the wrong. This is one I look at all the time, so I'm not sure why that screen came up. But Zero Hedge has some really good articles, and usually for financial and stuff, and usually they're articles that are really hard to find anywhere else. This is what the website looks like. And when you create a login, you can, of course, he's got pop-ups and stuff like that because he's, trying to generate revenue. I'm already signed up, so I don't know why this is coming up. But anyway, when you sign up, you can open the whole article. But the good news is there's some really interesting articles in here. Some of them you can't find anywhere else. And so Zero Hedge is a good place to get some information. Another place that I like is, and I don't see it here, is Contra Corner. Let me pull it up real quick. See if I can get it to come up. David Stockman's Contra Corner. Really good website for financial, blog site. He writes a lot of these posts himself, but really good stuff here. In fact, a lot of times you'll see me tweet something from one of these websites, and there's just a lot of articles and commentary here that you can't find anywhere else. David Stockman wrote this book, The Great Deformation, which I have not read, but I've read similar books, and I've heard it's really good if you really want to understand what's going wrong with the economy and why it's so confusing to so many people and stuff. So anyway, I just wanted to mention a couple things there. I would say for my guess at this point and it really is a guess. I mean, you kind of have to position yourself for a certain direction, and then let it wiggle, and then pick a place where you're wrong. But my guess is for the next 3, 4, 5 weeks, probably 3 to 4 weeks, we're going to, meander our way down here. And what's going to be key is when we get right about here, what is the market doing? I mean, we're going to look at things like, we're not going to look at things, but there are things that I read that look at sentiment, advanced decline ratios. So we want to see if the advanced decline ratio at this point is lower than these points over here. That meaning is there more fear in the market here than there was over here, and so on and so forth. If there was, then this is likely to continue downward to lower prices. If the advanced declines and the fear ratios and stuff like that are not as high here, then that likely means that we're headed back up to the trend line and beyond. Actually, at this point, at some point, when you have a consolidation like this, at some point it breaks out and moves higher. So that's what I would expect to happen. All right, everybody, that is it for this week's Middle Class Investor. Thank you for coming in and viewing the videos. Feel free to forward the links to your friends and family. The purpose of the videos each week is really just to kind of let you know where the market is, where we think it's going, so that you can make a more informed decision about how to manage your own money. Nobody cares about your money like you do, and you really, it's in your best interest to really learn how to manage it yourself. That's my opinion. But very, very few people do well in the market, and mostly it's because they're just in average things. They're herding around. They make bad decisions about getting out. I guess if you stayed in all the time, you'd have about a 4% gain, annualized gain, which is better than a negative annualized gain, but it's certainly not going to get you to retirement. So anyway, just keep coming back, forward the links to other people, and together we'll figure out how to navigate these financial markets and make money for everybody. All right, everybody, take care. Thanks a lot. Bye-bye.